everyone, my name is ALIHA KAZAMI and I am here for my presentation of macroeconomics. My topic is concept and scope of macroeconomics and the analysis and measurement of economic activity. And in this video, there are 50 MCQs which cover all the points related to my topic. Let's start with question number first. Which of the following best defines macroeconomics? Option A, supply and demand in specific market. Option B, the study of international trade dynamics. Option C, the study of individual consumer behavior. Option D, the study of international trade dynamics. The correct answer is option B, and its explanation is macroeconomics focuses on analyzing aggregate economic indicators such as GDP, unemployment rates, inflation, and national income, aiming to understand the behavior of the entire economy. Next question is, what does the scope of macroeconomics encompass? Option A, analysis of individual firms' production decisions. Option B, examination of government policies affecting the economy. Option C, study of consumer preference for specific goods. Option D, assessment of macroeconomic equilibrium in specific industry. Correct answer is answer B, and explanation is macroeconomics includes the study of fiscal and monetary policies, government interventions and regulations that influence economic activity at a national or a global level. Next question is, which of the following is not a macroeconomic concern? Option A, national unemployment rate. Option B, price changes of a specific brand of smartphones. Option C, inflation rate across the country. Option D, GDP, gross domestic product. Correct answer is answer B. Its explanation is macroeconomics focuses on economy-wide phenomena and aggregates, whereas fluctuations in the price of a specific product fall under microeconomics. Next question is, why is understanding the concept of inflation crucially in macroeconomics? Option A, inflation directly affects individual consumer spending decision. Option B, inflation impacts the purchasing power of money. Option C, inflation only affects specific industry. Option D, inflation has no significant implications for the economy as a whole. Correct answer is answer B. Its explanation is inflation refers to the general increase in prices of goods and services over time, leading to a decrease in the real value of money. This has implications for consumption, savings, investment, and overall economic stability. Next question is, which of the following is a macroeconomic indicator used to measure the health of an economy? Option A, price elasticity of demand. Option B, consumer surplus. Option C, GDP. Option D, marginal cost. Correct answer is answer C. Explanation. GDP is a key macroeconomic indicator that measures the total monetary value of all goods and services produced within a country's border over a specific time period, annually or quarterly. Next question. How does macroeconomics differ from microeconomics? Option A, microeconomics focuses on individual markets while macroeconomics examines the economy as a whole. Option B, microeconomics studies aggregate economic indicators, whereas macroeconomics analyze individual consumer behavior. Option C, macroeconomics only consider international trade dynamics, while microeconomics focuses on domestic markets. Option D, microeconomics deal with the government policies, while macroeconomics concentrates on business strategies. Correct answer is A. Explanation. Microeconomics examines the behavior of individual consumer, firms, and industries, while macroeconomics analyze aggregate economic phenomena and the overall performance of the company. Next question is, what is the primary goal of macroeconomic policy? Option A, maximizing profits for individual firms. Option B, achieving full employment and stable prices. Option C, reducing income inequality within society. Option D, encouraging international trade surplus. Correct answer is option B. Its explanation is macroeconomic policies aim to promote economic stability by targeting goals such as full employment, stable prices, and sustainable economic growth. Next question is, why is unemployment considered a macroeconomic issue? Option A, unemployment only affects individual workers, not the economy as a whole. Option B, unemployment rates have no impact on economic growth. Option C, unemployment reflects underutilization of labor resources, impacting overall production and consumption. Option D, unemployment is solely determined by microeconomic factors. Correct answer is option C. Its explanation is unemployment affects the economy by reducing aggregate demand, lowering income levels, and potentially leading to social and economic instability. Next question is, how do fiscal and monetary policies influence macroeconomic outcomes? Option A, they only impact microeconomic variables such as individual consumer spending. Option B, they have no significant effect on economic growth or stability. Option C, fiscal policies involve government spending and taxation, while monetary policies involve central bank actions on interest rate and money supply, both aiming to influence aggregate demand, inflation, and employment levels. Option D, fiscal and monetary policies are exclusively concerned with international trade dynamics. Correct answer is option C. Its explanation is fiscal and monetary policies are crucial tools used by governments and central banks to stabilize the economy, regulate economic activity, and achieve macroeconomic objectives. Next question is, why is economic growth considered a fundamental macroeconomic goal? Option A, economic growth primarily benefits the wealthy, not the general population. Option B, economic growth has no correlation with improvements in living standards. Option C, economic growth leads to higher income levels, increased employment opportunities, and improved living standard for the population. Option D, economic growth is irrelevant to macroeconomic stability. Correct answer is option C. Its explanation is economic growth refers to the increase in a country's outputs of goods and services over time. It is essential for raising living standards, reducing poverty, and promoting overall prosperity within a society. Next question is, what is the essence of the wage employment paradox in macroeconomics? Option A, higher wages always lead to increased employment level. Option B, rising wages can sometimes result in reduced employment opportunities. Option C, lower wages invariably boost employment rates. Option D, unemployment rates remain unaffected by changes in wages. Correct answer is option B. Its explanation is the wage employment paradox highlights the situation where an increase in wages intended to benefit workers may lead to decreased employment as firms might cut back on hiring due to increased labor cost. Next question is, how does the wages employment paradox challenge the traditional economic assumptions? Option A, it confirms the principle of supply and demand. Option B, it demonstrates the efficiency of labor market. Option C, it contradicts the idea that higher wages always lead to greater employment. Option D, it validates the concept of perfect competition. Correct answer is option C. Its explanation is the wage employment paradox challenges the simplistic assumptions that higher wages inevitably result in more jobs, highlighting in labor market dynamics. Next question is, what does the paradox of thrift suggest about saving behavior and its impact on the economy? Option A, increased savings leads to higher level of consumptions. Option B, reduced saving always result in economic growth. Option C, higher saving rates can sometimes lead to decreased aggregate demand and economic stagnation. Option D. Saving has no effect on aggregate demand. Correct answer is option C. Its explanation is the paradox of thrift suggests that while saving is generally prudent on an individual level, if everyone saves more at the time, it can lead to decreased consumption, lower demand for goods and services, and potentially economic downturns. Next question is, why is the paradox of thrift considered a paradox? Option A. It contradicts the law of supply and demand. Option B. It highlights the benefit of increased saving for economic growth. Option C. It challenges the notion that saving is always beneficial for the economy. Option D. It confirms the effectiveness of fiscal policy in stimulating demand. Correct answer is option C. Its explanation is the paradox of thrift challenges the conventional wisdom that saving is always beneficial for the economy, showing how excessive saving can actually lead to reduced economic activity and growth. Next question is, what does the paradox of thrift suggest about saving behavior and its impact on the economy? Option A. Increased saving leads to higher level of consumption. Option B. Reduced saving always result in economic growth. Option C. Higher saving rates can sometimes lead to decreased aggregate demand and economic stagnation. Option D. Saving has no effect on aggregate demand. Correct answer is option C. Next question is, what role does consumer sentiment play in the paradox of thrift? Option A. It has no impact on saving behavior. Option B. It influences individual decision to save or spend. Option C. It solely determines government spending policies. Option D. It determines the level of investment in the economy. Correct answer is option B. Its explanation is consumer sentiment reflecting perceptions of economic conditions and future prospects can influence individual propensity to save or spend, thereby impacting aggregate demand and contributing to the paradox of thrift. Next question is, how might government policies addresses the paradox of thrift? Option A. By implementing austerity measures to encourage saving. Option B. By reducing tax to stimulate consumer spending. Option C. By increasing interest rate to discourage saving. Option D. By decreasing government spending to boost private investment. Correct answer is option B. Its explanation is one approach to counteracting the paradox of thrift is for the government to reduce taxes, leaving consumers with more disposable income to spend, thereby stimulating aggregate demand and economic activity. Next question is, in what way does the paradox of thrift illustrate the independence of individual and aggregate economic behavior? Option A. By emphasizing the importance of government intervention in all economic decisions. Option B. By demonstrating how individual saving decisions collectively affect overall economic outcomes. Option C. By showcasing the dominance of macroeconomic factors over macroeconomic phenomena. Option D. By highlighting the insignificance of individual actions in shaping the economy. Correct answer is option B. Its explanation is the paradox of thrift underscores how individual saving decisions, when aggregate across the economy, can have significant effects on aggregate demand, employment, and economic growth, illustrating the independence of individual and aggregate economic behavior. Next question is, in the circular flow of income and expenditure model, households are primarily responsible for option A. Producing goods and services. Option B. Consuming goods and services. Option C. Investing in capital goods. Option D. Regulating financial markets. Correct answer is option B. Its explanation is, in the circular flow model, households are consumers who purchase goods and services produced by firm, thereby driving economic activity. Next question is, in the circular flow model, firms are involved in option A. Purchasing goods and services from household. Option B. Supplying factors of production to household. Option C. Producing goods and services for sale to households and other entities. Option D. distributing income to the government. Correct answer is option C. Its explanation is firms produce goods and services using factors of production purchased from households and sell them to households and other entities in the economy. Next question is, which factor represents the factor market in the circular flow model? Option A, household sector. Option B, government sector. Option C, financial sector. Option D, business sector. Correct answer is option A. Its explanation is the factor market is where households to provide factors of production to firms in exchange for income. Next question is, in the circular flow model, the government sector, option A, produces goods and services for households and firms. Option B, regulates the financial market. Option C, provides goods and services, redistributes income and imposes tax. Option D, invest in capital goods. Correct answer is option C. Its explanation is the government sector provides public goods and services, redistributes income through transfer and taxes, and regulate economic activities. Next question is, what role does the foreign sector play in the circular flow model? Option A, it supplies factors of production to domestic firms. Option B, it consumes goods and services produced domestically. Option C, it represents international financial transaction. Option D, it has no impact on the circular flow of income and expenditure. Correct answer is option B. Its explanation is the foreign sector purchases exports and supply imports, affecting the circular flow of income and expenditure through international trade. Next question is, in the circular flow model, injections into the economy include option A, government spending and exports. Option B, government spending and import. Option C, taxes and import. Option D, taxes and savings. Correct answer is option A. Its explanation is injections into the circular flow are additions to the economy's income and expenditure, such as government spending on goods and services and exports to foreign. Next question is, withdrawals or leakages from the circular flow include option A, government spending and export. Option B, government spending and imports. Option C, taxes and import. Option D, taxes and saving. Correct answer is option D. Its explanation is withdrawal or leakages from the circular flow are reductions in the economy, incomes and expenditure, such as taxes paid to the government and savings not spent on goods and services. Next question is, when injections into the economy are equal to withdrawals, the economy is said to be in option A, equilibrium. Option B, recession. Option C, inflation. Option D, deflation. Correct answer is equilibrium. Its explanation is, in equilibrium, the total injections into the circular flow of income and expenditure are equal to the total withdrawals, maintaining stability in the economy. Next question is, which of the following statements best describe the relationship between saving and investment in the circular flow model? Option A, saving equals investment, ensuring economic stability. Option B, saving is irrelevant to investment decision. Option C, investment always exceeds saving. Option D, investment is discouraged by high level of saving. Correct answer is option A. Its explanation is, in the circular flow model, saving is used for investment by firms to finance capital projects, ensuring the saving equals investment, which is essential for economic stability and growth. Next question is, how does the circular flow model illustrate the interdependence of economic agents? Option A, by demonstrating that households are entirely independent of firms and government. Option B, by showing that firms are solely responsible for generating income in the economy. Option C, by depicting the flow of goods, services, and money among household, firms, government, and the foreign sector. Option D, by highlighting that government intervention is unnecessary in a market economy. Correct answer is option C. Its explanation is, the circular flow model illustrates how various income agents are interconnected through the exchange of goods, services, and money, emphasizing their interdependence in a modern economy. Next question is, national income accounting is primarily concerned with option A, calculating the profits of individual firms, option B, measuring the economic activity of an entire nation, option C, estimating consumer expenditure on specific goods, option D, analyzing international trade balance. Correct answer is option B. Its explanation is, national income accounting involved the systematic measurement of aggregate economic activity within a country, including measures such as GDP and GNI. Next question is, gross domestic product represent the option A, total value of all goods and services produced within a country's border in a given period. Option B, total income earned by residents of a country regardless of where they are located. Option C, total value of country's exports minus import. Option D, total value of all final goods and services produced by domestic firms. Correct answer is option A. Its explanation is, GDP measures the total market value of all final goods and services produced within a country borders over a specific time of period, typically annually or quarterly. Next question is, which of the following is not included in GDP? Option A, government spending on public infrastructure. Option B, intermediate goods used in the production process. Option C, consumer purchase of new built homes. Option D, sales of used cars between private individuals. Correct answer is option B. Its explanation is, intermediate goods are excluded from GDP to avoid double counting, as their value is already incorporated in the final goods and services. Next question is, net national product is calculated by option A, subtracting depreciation from GNP. Option B, adding depreciation to GDP. Option C, subtracting indirect taxes from GDP. Option D, adding not exports to GDP. Correct answer is option A. Its explanation is, an NP is derived from GNP by subtracting depreciation, representing the value of capital that has been consumed or worn out in the production process. Next question is, which of the following best defines disposable income? Option A, total income earned by individual before taxes. Option B, income available to household after paying taxes and receiving government transfer. Option C, total income earned by residents of a country regardless of where they are located. Option D, total income earned by factors of production within a country border. Correct answer is answer B. Its explanation is, disposable income represent the income available to household for consumption and saving after taxes have been paid and government transfer received. Next question is, gross national income differs from GDP by option A, including net foreign income earned by residents from abroad. Option B, excluding depreciation of capital goods. Option C, considering only the value of final goods and services. Option D, ignoring income earned by foreign national within the country. Correct answer is option A. Its explanation is, GNI includes net foreign income earned by residents from abroad, while GDP only considers the value of goods and services produced within a country borders. Next question is, real GDP differs from nominal GDP in that option A, real GDP is adjusted for inflation while nominal GDP is not. Option B, real GDP includes government spending while nominal GDP does not. Option C, nominal GDP is adjusted for changes in population while real GDP is not. Option D, nominal GDP measures the total value of current production while real GDP measures the total value of production adjusted for changes in prices. Correct answer is option A. Explanation is, real GDP is adjusted for changes in price level using a base year prices, providing a more accurate measure of economic output over time compared to nominal GDP. Next question is, national income is defined as option A, the total income earned by a nation's residents from domestic and foreign sources. Option B, the total market value of all final goods and services produced within a nation's border. Option C, the total income earned by all factors of production within a nation borders. Option D, the total value of goods and services produced by a nation residents regardless of location. Correct answer is option C. Explanation is national income represents the total income earned by all factors of production within a nation borders including wages, profits, rents and interest. Next question is which of the following is not a component of national income? Option A rent, option B interest, option C depreciation and option D government transfer payments. Correct answer is option D. Explanation is national income includes the earning of factors of production and depreciation but exclude government transfer payments which are not considered as payment for productive factors. Next question is which of the following statements about GDP is true? Option A. GDP includes the value of intermediate goods and services. Option B. GDP measures the economic activity generated by residents of a country regardless of where they are located. Option C. GDP represents the total income earned by factors of production within a country's border. Option D. GDP is typically measured over a long-term period such as decade. Correct answer is option A. Its explanation is GDP includes the total market value of all final goods and services produced within a country's border in a given period, including the values of intermediate goods and services used in the production process. Next question is which of the following is not included in the calculation of national income? First one is rental income. Option second is dividend payment. Option C is government subsidies and option D is transfer payments. Correct answer is option D. Explanation is transfer payments such as social security benefits and unemployment benefits are not considered as contribution to national income as they do not represent payments for productive services. Next question is NDP is calculated by option A. Subtracting indirect taxes from GDP. Option B. Adding depreciation to GDP. Option C. Subtracting depreciation from GDP. Option D. Subtracting government purchases from GDP. Correct answer is option C. Explanation is NDP is derived from GDP by subtracting depreciation representing the value of a capital that has been consumed in the production process. Next question is which of the following method is used to calculate national income by summing the value added at each stage of production? Option A is income approach. Option B expenditure approach. Option C production approach and option D is value added approach. Correct answer is option D. Explanation is the value added approach calculates national income by summing the value added at each stage of production within an economy. Next question is the income approach to measuring national income includes option A adding up all expenditure on final goods and services. Option B summing the value of all factors of production including wages, rents, interest and profits. Option C estimating the value added at each stage of production. Option D calculating the difference between exports and import. Correct answer is option B. And its explanation is the income approach calculates national income by summing the incomes earned by factor of production including wages, rent, interest and profits. Next question is which of the following represent a components of a national income in the expenditure approach? Option A corporate profit. Option B government purchases of goods and services. Option C personal saving. Option B inventory investment. Correct answer is option B. Its explanation is the expenditure approach calculates national income by summing up expenditure on consumption, investment, government purchase and net export. Next question is national income can be measured using the expenditure approach by summing up option A consumption, investment, government spending and net export. Option B wages, rents, interest and profits. Option C value added at each stage of production. Option D taxes and subsidies. Correct answer is option A. Its explanation is the expenditure approach measures national income by adding up total expenditure on consumption, investment, government spending and net exports. Next question is in the calculation of GDP, net exports are obtained by option A subtracting imports from export. Option B adding exports to imports. Option C subtracting exports from imports. Option D adding imports to exports. Correct answer is option A. Its explanation is net exports are calculated by subtracting imports from exports representing the balance of trades in goods and services. And the last question is Which of the following statement best describe the relationship between national income and welfare? Option A. National income is a direct measure of welfare reflecting the overall standard of living in a country. Option B. National income provides an indirect indication of welfare, but it may not capture important aspects such as income distribution and non-market activities. Option C. National income has no correlation with welfare, as welfare is determined by government policies. Option D. National income accurately reflects welfare regardless of income distribution and environmental factors. Correct answer is option B. Its explanation is national income serves as an important indicator of an economic activity and prosperity, but may not fully capture the overall welfare of a population, including income distribution, inequality, and non-market activities such as volunteer work and household production. So these questions covers all the points related to my topic, and I want to thank my professor Mr. Vishal Verma for his able guidance and support. Thank you.